Good evening, everyone. We'll start this session in another 30 seconds. Once again, a very good evening, everyone. Welcome to After Hours with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this podcast, I would like to state the disclaimer here. Whatever contents, that is any stock specific content we share in this podcast, are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's intraday chart today, how the market fared. You can see Nifty had a gap up opening today, and it moved in a very narrow range in the first 2 hours. Later on, it turned highly volatile, and in the second half, selling pressure has come into the markets, and Nifty has turned lower, and it closed in the negative territory. This is on the today's intraday chart. If you look at the daily chart of Nifty, you get a more clearer picture. This is Nifty's daily chart taken from MarketSmith India. As you can see, in the last, including today, there are 6 trading sessions. Nifty closed in the positive territory. On closing basis, it managed to close in the green. However, on the intraday basis today, it turned lower. But because of last 30-minute weighted average, Nifty managed to close in the green territory today. And also you can see Nifty is comfortably trading above its 200 and 100 DMS, and it is slightly trading above its 50 DMS. Talking about market status, we are continuing to be in the rally attempt. We are looking for a follow through day to change the market status to confirmed update. Once this follow through day occurs, we'll be very quick in adding stocks to our model portfolio. The only problem is that even though the market is going higher, but the volume is not coming up. You can see here on the volume profile. Definitely, in the last 5 trading sessions, though the Nifty edged higher, the volume stayed comfortably below its average volume. That is a sign of cautiousness. It might be a fake rally which might be happening in the markets. If you couple price and volume action, then only you'll get a more constructive indication about market structure. As of now, the volume is not at the higher end, and also the price action is also not very convincing for us to change the market status to confirm the trend. That is the reason we have been staying silent. But it is always important to have capital preservation rules in place as well, because we are here to play the long-term game. We are not here to make quick money in just a couple of sessions, but our aim is to make a consistent return over a long period of time, that is over a period of 4 years, 5 years. If you are able to make beat mid cap or small cap benchmark return, then definitely your capital will compound over a period of time. That is the overall motto of investment methodology. So the patience is very key. If you are looking at the current markets, you might tempted to add stocks to model portfolio. There might be some of the stocks in the mid cap or small caps, which are looking good. But the general market is not very constructive for us to add stocks. There are many reasons for it. Globally, there have been various situations happening every day. There have been new situations arising in Europe and USA as well. So, which is not a very good sign, right? Inflation has also been edging higher on month-on-month basis as well. Most of the analysts are expected that inflation might top out and it might consolidate, but still the inflation figure is consistently going higher across the markets across the globe, which is not a good sign. Because of which central banks again they are increasing the repo rates. That is the reason growth is getting hampered in most of the geographies. So the macroeconomic front, the situation is not looking very good, but Indian market is very resilient if you compare the markets, other markets. And Indian rupee has also been some what even though the Indian rupee has hit a new all-time low, but if you compare Indian rupee and other currencies against US dollar, definitely Indian rupee depreciation is slightly lower when compared to the other currencies as well. Talking about markets specifically, technically again, during this week, starting from Monday, only Nifty Media and Metals have closed in the lower end. That is, Nifty Media has declined 0.9% lower, and Nifty Metal closed 0.3% lower. This is on the overall weekly front, and all the other sectors have closed in the green. Nifty Bank being the major gainer. Nifty Bank has advanced nearly 4%, followed by other financial sector service, that is Nifty Financials. And FMCG also has done very good during the week because of major companies which have reported results. Coming to today's session again, on the gainers front, you can see Axis, ICICI, Kotak, SBI Life, all are related to financial services, and one of the Hindustan Zinc, that is FMCG company, are the top gainers on the Nifty 50 index. Axis Bank has closed more than 900 levels. Axis ICICI also closed more than 900, which is a very good sign. On the losers front, we have two financial services companies here again. Bajaj Finance Twins, that is more likely called. They have closed 3% lower nearly, and Divis, Adani Ports, UPL are other major decliners on the Nifty 50 index. This is today's sectoral performance. The reaction is very mixed. You can see here there have been some green shorts and red shorts in this table. FMCG closed flat on the gainers front. You can see financial related sectors have closed higher. PSU Bank 1.9%, Private Bank 1.7%, Nifty Bank 1.7%, Financial Services 0.76%. So clearly today they belong to financial related companies. On the losers front, you can see there are many sectors: IT, media being the biggest decliner, metals, pharma. These indices have closed lower. For realty and FMCG closed relatively flat. And it is very today the move has happened mostly because of banks have tried to take Nifty higher, and these other sector indices drag the Nifty. That is the reason it closed slightly on a muted basis compared to the other indices. Some of the companies which reported results during the trading session and which have been very volatile, Laurus Labs has closed more than 9% lower after its result announcement, and also volume was very high. I'll try to show the chart as well for the Laurus Labs. You can see here Laurus Lab today clearly there were investors have not liked the results, even though the revenue and PAT have grown, but the investors have taken it on a negative side, and the stock closed more than 9% lower. The volume was also very high. It was more than 200% the average volume. RS line has sharply fell. This is also expected because of sharp fall in the price. If you look at the earnings, you can see PAT has grown more than 15% year-on-year basis to 230 crores. Revenue has also grown more than 30% to 1500 crores. Major hit was margin was slightly hit down, that is nearly 20 bps to 28.5%. That might be one of the trigger point for the investors to exit the stock. Some of the other companies which reported during the session were GNA, that is PAT has grown more than 36% to 33 crores. Revenue 23% growth to 420 crores. Hindustan Zinc and Ambuja Cements have also reported their results. Ambuja Cements, you can see PAT was down 68% year-on-year basis to 138 crore. It clearly missed the estimate, which were most of the consensus were expecting. And the revenue has grown 13% year-on-year basis to 3600 crores. Because of a decline in PAT, margin took a hit. You can see clearly margin came down to 8.9% from 21.7% a year ago. So not so constructive results today. Most of the stocks have fallen because of the results announcement. For the chart of the day, we picked ACE, that is Action Construction Equipment. The stock has formed a long consolidation base recently, and it has broken out from it. However, due to weakness in the market, it moved sideways. But you can see clearly the stock found support at its 50 DMA here. Volume has clearly came down, which is a very good sign. When the stock was breaking out in this portion, volume was very high. This is again a positive sign for the if you are looking for a strong breakout. These are the signs you have to see. Price action should be strong and volume action should also be strong. And base formation is also good enough. I can see during the base formation, when the stock moved along with its moving averages, volume was below average. During the right side of the base, volume came in. These are a couple of the pointers we have to look into when you are evaluating any base pattern. On the ratings front, the stock is looking very good. There is no doubt about it. EPS of 90 indicates a strong fundamental profile. You can see the sales growth consistently. The company is able to report sales growth. Only 2 quarters EPS has come down. Otherwise, EPS also was very strong. You can see the growth rates: 500, 600, 183, 146% of growth rate is not easy for any company. Sales also, you can see 30-40% of sales growth is very difficult, and it's very company has achieved in more often than not. And coming to the other factor, that is number of funds invested in the company. Again, during the December 2021, sharp fall has seen in the number of funds from 37, but from there I can see again fresh investors have institutional investors have taken positions, and from 29 the number of funds has increased to 40. Again, it's a good sign on the institutional front as well. So overall, on the ratings front and technicals fundamentals are looking very good on this stock. If you look at the stock on OD lens, it is fitting most of the criteria. So if you are having this stock in your portfolio, you can consider holding it, and you can keep the 1 or 2 points below its 50 DMA as a stop loss, and you can try to write the profits from there. However, fresh investments, as I said previously as well, we are not advising at this current moment. Only if you are holding it, you can continue to hold it with a stop loss below its 50 DMA. Thanks for joining today's after hours, and have a good weekend and happy Diwali to everyone. Thank you.